Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, January the 17th, 2023. The markets continue to, in my mind, trade sort of erratically and very much in line with what I would be expecting for the end of a corrective phase, number one, but just it seems to be trying to force its way higher and meeting more and more resistance as we kind of go. I'm going to start here in the NASDAQ. We're going to start on the hourly chart, as there's nothing to add to the larger picture. And so I'm just going to focus on this finishing, what I'm still considering a finishing minor second wave. And again, just to kind of go over the pattern thus far. The NASDAQ thus far has remained within that minor wave 2, forming a double ABC corrective pattern. We can see the first ABC, we see the X wave, we see the second, the A and the B, and now the C. While it was in this initial phases of this corrective phase, I kept discussing that I really was expecting it to at least follow through to the upside and get itself to, at least as a minimum, the 38.2% retracement level. Whereas the most common Fibonacci retracement for a second wave would be 50 to 62% of that wave one. Well, now we've gotten up there, and we've gotten pretty close here in the NASDAQ of getting to that 618 percentile, and that comes in 11,740. Today, we got up to 11,685. And that actually was within the first hour of trade. And then from that level, the market just came flying back down and then spends the balance of the session working its way higher again. Kind of choppy, not impossible to trade, I will say. In fact, I had a fairly decent day, but again, as I've stated often, I am a day trader, and therefore I do not take a bias to being bullish or bearish. I follow the price action. I use some indicators via the moving averages, my Elliott count, my fibs, and play with what's in front of me. And so the moves themselves did produce some profitable trades. Now, again, what becomes more difficult is the massive interpretation that the market is bullish, we're going to go down, interest rates are going to go down, this is going to happen, that's going to happen. And that just sort of starts to force a great deal of many different factors of people coming in, trying to plan ahead for what they're now perceiving as a sustainable new up move. I believe when I go back and I review the characteristics of a second wave, this one is absolutely no different. And before I had shown that, and I'll do it again, if I go out to the 4-hour chart and open it up just a little bit, we can see the intermediate wave 2. Then I can see that I got the minor 1, and now I got the minor 2. They look very similar. Chop fest, fits and starts, massive little rallies, declines. So it's like a rally, rejection, a rally, rejection, a rally, rejection. Now we're going through the same thing, a rally, rejection, a rally, rejection, and now we're just going to try to finish this up. So again, as I watch what's going on, particularly today, we had Goldman Sachs reported earnings, and we're not anywhere close, I guess, what the market was expecting or wanting or desiring. And on that basis, Goldman Sachs took a nosedive. At one point, it was down almost $29, ended up down about $24 as the bell was ringing. That dragged down the NASDAQ, that dragged down the Dow and the S&P. Now, the NASDAQ, in my mind, would have been down as well, but it was being propped up by Apple, primarily, I may just say Tesla, and Microsoft. and also NVIDIA. So there was like a very small handful of stocks that actually traded well. NVIDIA up 8, Tesla up 9, Microsoft up 1, Apple up 1, and a bit of change. Now, Apple traded above 137. So what I continue to see, particularly now in Tesla, this is a short squeeze, forcing them to make the covers, forcing them to get out, forcing them to do whatever they're forcing them to do. And then after the close, Moderna reports that there's a bronchial vaccine that has now gotten the FDA approval. And so, bing, they add 5% to the stock, now even more. Stock's up 13 off the close. Again, forcing a short squeeze. So what I see happening is just things are being forced and traders are making their moves based on what should be perceived as positive news, but there's no indication whatsoever as to what the potential add to revenue that will produce. So it's kind of an knee-jerk reaction. Oh, it's great for the stock. Oh, we've got to go in. Oh, I got to cover my shorts, et cetera, et cetera, et cetera. When I look at the options, they were rallying around 200. Stock got their lickety split. Now, whether this all holds, I don't know, but it is adding to the up move within the NASDAQ. So bringing it back down to that hourly chart, I think we still are within this final fifth wave up. Got a lot of interpretations coming from subscribers to the YouTube channel here, and I welcome those. I respect them, and I normally will take them into consideration and then answer because I'm being asked what I think. So I will get back to everybody that's asked me to do that. So, but in this case, what I believe that we are in likely what's turning into sort of like a diagonal, kind of coming into its completion point. So again, what I have so far is 1, 2, 3, 4, and this is like a three-way 5, but it doesn't fit totally. If it does, all of this comes collapsing lower, because that after that, you can see that the market just turned and nosedived all the way down. So it got from the high at 11,684 down to 11,554. That was a pretty good move, all within an hour after reaching the high to an hour later reaching the low. So that's, when I look at this thing, I have to be honest with you, I look at what's going on in the bond market. I look at what's going on in the dollar. I look what's going on in various axillary or ancillary markets that kind of swirl around, sometimes the equities, particularly the bond market. Again, that 30-year bond was extremely volatile today. Traded back above 130, traded down below 129, traded back above 130, traded back down to finish the session down a half a point. Now, to me, it's very confusing. I can't put my finger on as to why the volatility is really high right now in that market. But there's a lot of things changing hands, and there's a lot of positioning, and there's a lot of things going on that I don't need to know, but I can just see. But my bottom line here between the bonds and the equity markets, I just feel it's not going to end well. I feel that within our equity markets, particularly in the NASDAQ, regardless that earnings are starting to unfold, I just don't, and I can't buy into this mass, it's not hysteria, but this mass grouping of, if one does well, let's go get the others. For example, United Airlines swings back to a profit after a dismal couple of years because of COVID, because of the pandemic. Finally, they're getting people that are going to start traveling again, and the aircraft are full, and et cetera, et cetera. So it swings to a profit in United Airlines, and they buy United, they buy American, they buy Southwest, they buy JetBlue, they buy Delta, they take them all. If one goes, they all got to make money, and it all has to last. Now, granted, I don't think it was a smart move to buy up Southwest Airlines after what they just went through with the massive amounts of cancellations. How United swings to a profit against what is actually happening and getting flights to and from and without cancellations, et cetera, I don't know. But in any case, they did report that they swung back to an earnings. I don't know what they were. I just saw the headline. Now, again, I don't particularly dive into earnings reports to find out if that's really, something. I go by what happens in the index, to be honest with you. So, but what I'm seeing is this mad dash to grab on to a bullish picture, and no matter where it comes in. That's why I really begin to feel this does not end well. So we're back into that mode, it seems, that we're just buying because we're going to go up, we're going to go up, we're going to go up. And I believe that what's been being peddled on CNBC, on Bloomberg News, on many of these financial media sites is a false narrative. And that just tells me this just does not going to end well. Now, I can't tell you what is going to be the driving the final nail into the coffin of this rally, or what's going to be the catalyst for this market to turn and drop. Tomorrow, pre-market, we have the PPI final demand, retail sales, those both 8:30 a.m. Eastern, and then another one, which I think will be very important, industrial production. And that comes in at 9:15 Eastern. And then again at 10 a.m., we have business inventories and housing market index. So we got a bunch that could start to pull some weight on the market. We have a Fed governor out stumping something at 9:30. That's when they begin to speak. And another one at 5 in the afternoon. So again, they're all out there. They're all running around. And so we're all kind of just hedged. We're all kind of just teetering back and forth. How do we want to do it? Now, how I trade, folks, is, again, I'm a day trader. So I don't really care if it goes up or down. I prefer that it does both, and I prefer that it does it with volatility. It moves a little quicker, make nice moves. Chop is not my friend. Range bound, I can trade, but chop, bar to bar on a 2 or a 5 minute, being chop, is that's too difficult to trade. In any case, what I think we got to continue to allow for here in the NASDAQ is we might see the market continue to move higher once Globex reopens in about an hour. And we might get up in the NASDAQ to that 0.618 retracement, which is 11,741. And it might even get up to 750 for all I know. A little bit below, a little bit above, but that's the zone. That's the area. We have to leave some additional room that it makes one more little leap for the heavens to complete the move and to turn the market. Again, I'm not even going to suggest what I think could be the catalyst to drive this market lower. But I will say that I believe it will come as what people will see as, what a surprise. We weren't expecting that. We were expecting continued improvement. That's going to be my guess. So moving averages right now in the NASDAQ on the hourly continue to point. They're not as pointing up as hard as they have been, but the 200's in a nice steady climb here. The 50, not bad, but steady climb. The 20, same. The others, pretty much the same. But it's kind of getting tired, it appears to me. The whole thing's getting tired. We're up quite a bit from the lows. And so I think we're just getting tired, and we're going to turn and likely begin the next. Over in the S&P, same story, a little bit different. The S&P did reach 62% retracement. At 40.30, in fact, it exceeded it by a little bit, with today's high coming in at 40.35. Whether that completed the move, again, I don't know, because as we can see, if I'm even counting this as best as I can, 1, 2, 3, 4, 5. It's a 3-wave. But it came all the way back down. So is it, again, subdividing? I don't know. Leave room, though. We need to leave room until the market begins to break down back below 4,000 and doesn't stop, back below 39.85, back below 39.60, back below 39.40, etc. And it needs to be doing it lickety split. So in other words, it's just going with a purpose. People are now, they're convinced that's it. That was all over, and the next move is down. So again, we see a swing in positions. We see a swing and getting out of longs and going back short. Again, it's all kinds of things will be happening all at the same time. So what could be the catalyst? I don't know. So once again, I'm looking towards, we have economic data that needs to come out. And if it comes out in favor, we're going to jump and we'll likely get up to 4,065. If it comes out unfavorable or disappointing, I expect we drop very quickly. And we'll break the 50 and we'll head for the 200, likely breaking that all in one. That's my feeling in the market. But here again in the S&P, as in the NASDAQ, we've got the moving averages. They're still angling higher. They're still in alignment to go higher. So we didn't have any change in the moving averages today, although overnight they did come down and touch the 50, got back down just below that 4,000 mark. No, actually 4,050 was the low. So they tried, didn't quite make it. And then that 50 held the market for the balance of the session. And you can see that when I open this up. Like 1, 2, 3, 4, 5. So it held, 4,000 held 5 times, bounce it off each time. Let's see what it wants to do. Let's see what they do tomorrow. Let's see how it reacts to those, the economic data. But again, I'm leaving open the potential that we go up, create a new high, get it up closer to maybe 40.40 to 40.50, but we have 40.65 top side. Above that level, we have 41.80, which is that previous high that in order for this to remain a minor wave 2 cannot go above. And there's a lot of room. There's 120 points between the 2 points here. So, but I really would not be expecting this thing to start heading towards 4,100. So if it does, we'll deal. If it gets above 41.80, I'll be readjusting the count. Because remember, as I pull this out, I have not yet any particular reason to be changing the count unless we break 41.80. Then this is not a minor 2 correcting a minor 1 when we go above the starting point of the minor 1. So we have other alternate counts, and I'll probably start adding them depending on what happens tomorrow. I'll be bringing them back into focus so that we can take a look. The one that I probably would go with is that this, instead of being intermediate wave 1, actually was the finishing point for primary wave A, and this is all part of a primary B wave, which would suggest we get back up towards these levels. I'll go into a little bit more detail with those probably tomorrow versus today. For now, though, I'm going to leave it right there. And I don't see what else we have on tap as far as earnings tomorrow. Not of any of our big titans. They all come out much later and then into the beginning of February. So I'm going to leave it all right there. Wish everybody has a really great trading day tomorrow. And our next update will be on Wednesday, the 18th.